at a place, though, where in the next 2 to 3 years, you probably remember very well when we had we had dial-up internet, and then we had broadband, but it was telephone company broadband that was like, it was like 4 times faster than dial-up DSL, or you had these kind of things.
It was shitty.
It wasn't very good, yeah. So we're right in that phase. We're like in the DSL of blockchains, and we're getting really close to the fiber optic. And so that's key, right? If we can get there.
Will you pick a platform, because there's lots of competition, Solana, Polygon, you mentioned, Mist, a new idea. Are you going to support them all?
We're adding more and more. Here at Converge, we've announced adding Cosmos, Polkadot, Arbitrum, Optimism, Near, and there are more on the way. And we've also announced a cross-chain protocol that makes it easy for developers who are building those wallet apps to not have their users to have to worry about it or care, so that you can send or receive no matter what you have.
Because in reality, if you get regulated and are one of the regulated stablecoins, this is where the use case starts to get interesting. And for the new user that comes in that is waiting for lightning speed transactions, they don't want to. If your credit card took you 40 seconds,
and they don't want to think about it. They don't want to think about it.
So you want to drag some of those platforms with you that can provide that speed.
Absolutely, yeah. I think the important thing is there are a lot of competing infrastructures. I also use the analogy of there were 17 mobile operating systems at one point, and everyone, Compaq, Microsoft, Palm Pilot, Nokia, NTT, Samsung, everybody had some other competing smartphone operating system. And no one knew at the time which one was going to get the developers and which one was going to become usable by a billion people. Obviously, Steve Jobs got it right, came in, was patient, and delivered something that everyone could build on, and then was cloned, obviously, or copied to some degree by the likes of Google. But I think, do we have the iOS of blockchains yet? Maybe it's in front of us right now, but we're going to see that emerge. And that's going to be really critical to the kind of scale that we're talking about.
Let's talk about something else, because there's a parallel path developing for blockchain that is gotten a lot of press, mostly negative, NFTs. This first iteration of apes and JPEGs, and they have basically been wiped out. It's fun, and it was interesting to see them trade for $500,000 and then just get wiped out. But there's also brands out there, and I know this because I work in certain verticals. I'm a huge watch collector, and in the watch industry, the secondary market is much larger than the primary market. Every watch that's made by Rolex is sold. There's nothing to buy from Rolex right now, just an example. But there's billions of dollars of Rolexes that have been in the market since the 50s, trading every day. Unfortunately, many of them fake. And so what the secondary market wants is to use the blockchain through NFTs to authenticate physical assets. Now, in the negotiations we're all having and the discussions we're having, and I want your opinion on this, when these are used to authenticate paintings and watches and pens and jewelry and real estate and cars and all these...
All property, right.
So what is that? Is that a security? Because I'm going to add a little to it. One of the reasons the watch industry is looking at this, and there's a group of us that are in the horological societies, I'm one of them, we're pointing out to the makers, like a Patek Philippe, an FP Journe, a Rolex. Every time the secondary market trades your watch, you get nothing. And it's trading at 400% higher than what you made it for. You're in the same situation that a rock band watches and happens to the secondary ticket market of a hot show. Wouldn't you like to get 3 to 7%?
Yeah, it's such a
no-brainer,
powerful
right?
thing.
But what is that? Is that so that now that NFT authenticates, the maker authenticates that it was made in the factory, and then it starts to trade in the aftermarket. Is that a security paying a utility dividend?
We'll have to see what lawyers think about all that. But
what do you think?
I don't think so. I think that these are technologies that make it possible to have better records to authenticate property and the ownership of property. I think if you're fractionalizing the ownership, then you're crossing into...
Fractionalizing, it stays with the piece from owner to owner.
Yeah, I think the idea that you have royalties or equivalent, the downstream payments, that as a piece of property is bought or sold, that the originator of that property can receive a piece of the payment associated with it. You have structures like that that are certain NFT protocols, like the NFTs that get minted can only be transacted and transferred through the protocol, and the protocol itself includes that seigniorage essentially for the originator. So there's ways to do it, even at the protocol level. And I think that's more of a commercial arrangement for the buying and selling of property versus a security. You're not making an investment for an expectation of profit through the effort of others.
If you're buying art down the road, and I'm a buyer, I would want the authentic. I would want to own the NFT that authenticates that piece of work.
Yes.
But the estate of the artist, should that person be passed, would get a royalty because it's trading, and every decade when it trades again at a higher or lower price, they get a piece.
Yeah.
To me, that's a commodity. That is not a security.
Right. Yeah, you're dealing with the transactions of commodities.
So we could end up in a place where you fractionalize an NFT as a security.
That's right.
With a prospectus, or if it's an authentication vehicle, it's a commodity. I think that's where we got to get to.
Yeah, part of this is just like, how do we use NFTs and the utility that comes from them, which unlocks all kinds of different forms of entitlement around ownership, whether it's the creator or someone who possesses it, entitlements that they might get. So I think early days there, but it still has huge potential as well.
Let me hear your thoughts on this, because guys like Sam Bankman-Fried have tried, Gensler has tried, the really big firms, to get the message out about crypto, to commercialize the message. And it's been a real struggle because there's a really tight, small crypto community of really rabid fans, if you want to call them that. That's, in my view, starting to hurt this space because a lot of them don't believe in regulation, a lot of them believe in decentralized only, a lot of them are rogue in terms of the way they think. Some of them are founders of these chains. That's not helping because to get the 500 million you're talking about to use this stuff, people have to feel safe about it. They have to think, okay, this is just a better mousetrap, and everybody else is using it. Where do you sit on the continuum? And I could call you out on this. Are you a founder fundamentalist, or an advocate for full regulation, full transparency, or are you somewhere in the middle? Are you trying to keep everybody happy, which I'm finding is impossible?
I am more in the middle, but I think I've always believed that we're simultaneously building a new internet. We're building a whole new layer of the internet, and it's really vital that there are first principles that can be upheld in what that infrastructure is.
Well, maybe I should ask the question in a different way, more binary, more black and white. Are you for regulation or not?
I think regulation's critical for the financial applications of this. The technology is useful in so many domains, even outside of financial, and so the key is, what we don't want to do is over-regulate the infrastructure layer itself, because that is, to me, just like trying to regulate internet protocol.
I mean,
right?
for USDC, which is...
That makes sense. That is a regulated
I can't even use it if it doesn't get regulated.
I mean, we're only able to offer the product we do today because we actually did launch it in a regulated manner through the money transmission rules and payments supervisor.
You built it to roll on the regulated highway, but it's not the regulated highway yet because my auditor won't let me call this a cash equivalent, which is extremely screwed up.
Yeah, so clearly, like, it's a constant kind of upgrading of that kind of statutory environment.
There is, and you will certainly get some of this in this conference, and thank you for hosting it. I think it's a lot of influencers and thinkers coming here to, and many will air their frustration, as I will, because this is getting really boring. We got to get something done here.
Yeah.
Talking about it every
I think that's right. I mean, this is like, and I'll be beating this drum not just here, but all through the remainder of this year, which is like, the time is now for Congress to act. This isn't just going to come from an agency issuing new rules. This requires Congress to act because it's novel and new, and we need these clear statutory definitions and statutory swim lanes. And so now's a critical time for the United States to act. And it is making the United States look ridiculous. The fact that our Congress cannot get together on something that is so clearly going to be a vital part of the way that the internet economy works for the next decades. And so it's a pivotal moment from my perspective.
I'm a little optimistic on that of late, of the last few weeks, because when I first got to the Hill, everybody was holding on to their bill as if it was their brand. And now there seems to be consensus that they don't care which bill gets
Right.
advanced.
Whoever's got their name on it,
They're
it's
going to
more about
support
we
it.
got to figure
Which
this
I
out.
think is
Yeah.
a major move as we're going into the midterms to
Yeah.
see that
Yes.
Haggerty and Toomey and Hildebrandt, they're all
Yeah.
pushing whatever one was going to go.
Yeah.
And I think that's very bipartisan. I think you've been a big advocate for that. You've
Very
done a good
much
job
so.
on that.
Yeah.
I also believe that the one thing rule, just getting stablecoins done,
Yeah. It's the lowest hanging fruit.
yeah, it's the lowest hanging fruit, but it would also signal to the rest of the crypto market, primarily the institutional investor market.
Yeah.
I actually think that if you, and this is a speculation, that if you got this thing done with just stablecoins and you got it regulated, it would increase the value of a lot of different positions I have, including Bitcoin.
I'm happy to hear that.
Because they would make the assumption, because we're stuck in a 17 to 22 range on Bitcoin, and we're never going to get out of that if we don't get institutional support. It's just going to sit there forever. It's not a bad outcome for miners of scale. They're getting awards at 7,000 to 8,000. They're trading them at 17 to 20, but it's really getting old. And it's losing its momentum as an idea because it can't seem to get anywhere.
This is a breakthrough moment technologically, in terms of user experience, in terms of regulatory, in terms of what people delivering on the real utility value of all of this. And I think you're dialed into all the right themes for what's
Yeah.
needed here.
I think I am, but I go everywhere where I can talk about it to people that will listen. I'm very fortunate to have a massive platform to speak to, but there's a fatigue in
Yeah.
this market now.
Yeah.
And there's a lack of adoption, and there's a lack of wallets that we talked about. There's a lack of a lot of stuff, and
Yeah.
it's really coming to the front now. People
Yeah.
are saying, we got to break through this. It's like a giant log jam.
Yeah. That is what we are trying to do as an industry, and Converge is we're bringing all the players together. And the big theme is from speculative value to utility value. That's the key. We've got to grow there.
You're actually the test case.
We
You are
are the anchor of that.
Yeah, you are definitely the canary in the coal mine here, and it's a remarkable time. It would be great if you were able to announce some regulation on this thing. It would be a game changer.
Yeah.
I'm very optimistic if anybody can do what you can. There's a lot of people rooting for you, a lot of investors rooting for you, a lot of people that want to use the product that can't.